On this episode of That Kingsville Podcast, it's Barry Wilson from Chapman Sanger & Associates. We're talking personal taxes, tax season, what you should know about, what you don't know about, things you should consider, things you should not consider.
What to do with that money you made off Tupperware.
Yeah, and don't bring a bag of grocery bag full of receipts in to see them. All that and more on this episode of That Kingsville Podcast. The That Kingsville Podcast is proudly brought to you by Kingsville Brewery. Hopefully, in the coming weeks, the Taphouse 127 will be reopened again. You know, as the days are getting longer and the temperature is getting warmer. Nothing more.
Get thirsty.
Nothing more
St.
than
Patrick's Day coming.
Oh, St. Patrick! I hope they're open for St. Patrick's Day.
A light A.
Oh, a light A. Get the Czech lager and the hot 2.0 and the pink lemonade. Right? Like again. Thank you, Kingsville Brewery, for supporting That Kingsville Podcast. Welcome to That Kingsville Podcast. I'm your host, Dave Hunt, Kevin Black, Steve Ianson. We got a special guest today, Barry Wilson from CSA. Welcome to the show, sir. We've got you here. We're gonna talk finance, taxes, and whatnot. So,
yes.
Hey, everybody, Barry's got all the answers.
The most taxing interview yet.
So that's one.
Oh,
we're gonna take a toll on how many puns that Steve and Barry can kick out.
He might be our number one guest, though.
Oh, this is going to be a write-off.
Viewers, take your no-dos now.
So we're in the spring. Taxes are inevitable, right?
Yep.
Death and taxes, right? But that's not just all accounting.
Days are getting longer.
Right? You know, like everybody's getting invigorated to sit down and read T4s and start trying to figure out where numbers go on their taxes. So,
right.
Barry, how long have you been, in the accounting world? How much experience do you have?
Oh gosh. I know I look like I'm only 30, but
You're 32.
Yes.
Let's be honest.
32. 30 plus years for sure. Yep.
So you've seen the progression of, just how kind of the accounting industry is kind of changed and, different tax laws and different things have kind of transpired over the years. So
yes.
Yeah, this is why we kind of wanted to do a public service episode and have Barry come in and provide some insight and some, just some knowledge about what happens. Because quite frankly, if my wife wasn't an accountant, I'd probably owe CRA tens of thousands of dollars because math is not, it's not easy when you got so many different fields and have to know things.
You probably owe her more.
Or more than likely. So every year tax season rolls around. Barry, when's the filing deadline for taxes, personal taxes?
Great question. The filing deadline, as always, is April 30th. With the exception of when it lands on a weekend, it's usually the following business day. But this year it falls on a Tuesday.
Hurrah, hurrah. So there's no excuses.
Right.
So
now, with the exception of self-employed people, they have until June the 15th to file. However, if they do owe taxes, the payment is due April 30th. They'll incur interest.
Yeah, so they should probably be on top of things.
Yep.
So what should I have done already? What am I too late to have taken care of by now?
Well, being today is a leap year.
Okay.
Happy leap day, everybody.
Mm-hmm.
And with the extra day I get every 4 years, I'm spending it with you guys. So it's just great.
Wow.
It's that free day for salaried workers.
Right. Yeah,
I brought that up this morning. Someone
Way to go.
said, I never thought of that. But yes, today is too late to contribute to your RRSPs to count for a deduction for your 2023 tax year, unless you get in before midnight tonight.
So if people are seeing this, then you missed it. Sorry.
Yeah, because this will air next week, right? So
Yeah. So you know what? If you had a time machine.
correct. So your RSP contributions that can be effective for the 2023 tax year or for future reference, you have until 60 days after the end of the calendar year to make your RSP contributions. Yes.
So, we're gonna dispel some myths. So I'm gonna play like average Joe on the street and ask some pretty dumb questions, even though I know the answers, but I'm gonna ask some of them because
I'm hoping I know them.
Hey Barry, you're gonna know them. It's like, so how much can I put into my RRSP every year? Because if I want the biggest tax deduction, I would put my whole salary in RRSP so I get all that tax back. Is that possible?
Well, it is possible, but you want to make use of all your personal tax credits. So
Uh-huh.
that might not be the most efficient thing to do. Also, you don't want to over contribute because you can incur some significant over contribution penalties and interest, which I've helped clients navigate before when it's not pleasant. Now, your RSP contribution, annual RSP contribution limit will vary. The limit varies every year. Like this past year, I believe I made some cheat notes. I hope everyone's okay with that.
Oh, you're fine.
If I remembered all these.
Beautiful station.
Thank you.
Old firm, though.
That was an old firm. We don't mention that.
No. CSA.
CSA all the way.
CSA.
Yeah, hopefully the partners will like that. I believe of course I can't find it on the page right now, but
That's okay,
I believe the RSP contribution limit for 2023 is around 30,000. Now, that doesn't mean you can run out and contribute 30,000 to your RSP, because that's limited to 30,000 or 18% of your previous year's earned income. Okay.
So there's also TFSAs, though, as well.
Correct.
That's also a thing that, what has it been, a decade, 12 years that we've had TFSAs as an existing way to save for the future?
Yep. TFSAs, the contribution limit right now is just gone up to $7,000 per year. Presuming that you have never contributed to your TFSA since inception, I believe the maximum you could put into your TFSA and the contribution room will accumulate and carry forward. It's around $94,000 if I'm.
Yeah, we're almost cresting six figures.
Yeah.
So if you've not contributed anything, then you can actually allocate that towards savings. And
the key difference between a TFSA and an RSP, which a lot of people, and again, I just had a conversation today with a client who called me and asked me what the difference was. An RSP is a tax deferral mechanism where you can actually get a deduction for the amount that you put in your RSP in a given year. So the idea there is if you are earning, let's say, income in the range of $56,000 to $100,000, for every $1,000 you put away in your RSP, you're going to save about 30% tax. The premise there is that the money goes into this RSP, kind of like a tax shelter bucket. And when you are retired and you have no other earned income, you take that out. And when you are retired, presumably you're going to be in a much lower tax bracket, let's say 5-10%. So you're putting it away, saving 30% tax. When you go to take it out, you're going to pay only 5 to 10% tax. So a lot of people don't quite understand that concept, where an RSP is not designed to avoid tax. It's to reduce tax and to defer tax, because the growth on that money will also accumulate tax deferred. Whereas a TFSA, the premise there is that you put the money in, you don't get a tax deduction for it, but whatever investment vehicle that you choose within that tax shelter, whatever it grows to, and the money that you put in and the growth on the money can be withdrawn without paying any tax. Hence the name tax-free savings account.
There's and you made the point about being tax deferral. There's the misconception about accountants and what it is, what you do, what service you provide. Mm-hmm. And a lot of people think that, you can walk into an accountant's office and you're like, hey, you guys could cook the books to give me all the money. So chop, because I heard a guy, the guy from the shop, and he told me that he went to his accountant, and then all of a sudden,
he's got a new car.
Exactly. So why can you do that for me? So, and again, like I'm sure you've heard, and we'll get into stories.
So what's that service cost?
Yeah.
What's book cooking cost?
Nah, it's chef class. Right?
Oh,
it's cooking class.
Yeah. Yes, we get a lot of people come in. Well, my neighbor said this, or my hairdresser said this, and I was like, well, that's interesting, but no, that's not the way it works. We are not going to, and when I say we, I speak for myself, and I'm sure the firm at large, same thing.
Any firm,
any
reputable
for that matter,
firm,
reputable. Thank you.
Any accredited individual as well
is going to guide you, so you're not contravening any type of compliance rules in regards to the Tax Act. You're not putting yourself in a compromising position, let alone myself or the firm. Listen, I'm going to, if it's navigable, or what's the word I'm looking for? If it's
navigable,
navigable, or it's doable, yeah, we're definitely going to make sure that we're going to minimize your exposure to tax, but you're never going to eliminate your tax. You're never going to totally avoid it.
But if I'm a sovereign citizen and, I don't live in, I'm going to put the voice on when I'm just asking those questions. Okay. So you know the character.
I kind of figured.
All right. Because my buddy, he told me,
maybe horse.
he told me if I was a sovereign citizen, I don't have to pay taxes and I don't have to get a license plate or a license because I'm not a citizen of Canada. I'm sovereign, so I shouldn't have to pay anything. So this is against the law. No.
No.
Well,
I'm going to hear diplomatic immunity soon.
Right.
What you're talking about.
Right. No. Well, and again, that's a misconception because the services that accountants and lawyers, like these are grown up things that at one point in time you gotta address. You gotta understand at least, the gist of it.
Yes. We're not going to put anyone in a compromising position with the advice that we give. It's all going to be above board. It's all going to be, let's put it this way. We service thousands of clients and everyone seems to be in the same area. So it's not going to be something new or it's not going to be something so crazy that other firms haven't done it. It's the same thing. We all operate from the same manual, operates the same guidelines and the procedures and the compliant, the Tax Act. That's what we go by. So if you're looking for some kind of magic answer and you can go and explore 20 different firms, 20 different professionals, and they're not going to give you the answer you want to hear.
Of course not.
And that a lot of times people will do that. They just keep going until they find the answer they want to hear. And guess what? They're going to be in trouble. It might not be 2 months from now. It could be 18 months from now. Because a lot of things because CRA can go back up to
7 years.
7 years, and they can go even beyond if they suspect fraud or not being fully
transparent with filings. Yeah.
Correct. They can go back indefinitely, and you can end up in a lot of trouble.
I didn't know that.
Yeah. Keep your receipts. Again, this is something that again, my wife being an accountant, I've benefited just because she knows, so I don't. I'm not exposed. But that's why we, getting Barry in because, like I said,
you should have Jen here, maybe.
I asked her, and she said, I think Barry would be the better person because he's more charismatic and able to speak in front of a camera. So she thinks very highly.
Well, there's a camera here.
Yeah, too.
No,
where are you?
Don't look over there. Don't look over there.
So in other words, when you file your taxes, you got to be able to bracket up.
Oh,
right.
It's what, 2 or 3? We're on the 3.
That's 3.
Yeah.
That's 3.
Sorry.
Every year there's changes to the Tax Act. What for families? What are some of the key changes this year that people probably should have already known about? But
Kevin, I'm so glad you brought that up. How spontaneous. We discussed the deadlines. That's an important thing. One of the big ones that's going to have an impact on everybody is the increase in the basic personal exemption up to $15,000. That means on an annual basis, the first $15,000 that you earn will not be subject to federal tax. So that compares to 2022, where it was $13,800 roughly. And in 2024, it's actually going to go up to $15,700. So that'll be a benefit everyone's going to experience or have. Let me see. What else can I tell you? Some of the compliance rules have changed quite a bit in the last couple of years, particularly in respect to principal residences. The government has been keying in on people being compliant in disclosing on their tax returns, which you're obligated to do. When you dispose of your personal or primary residence, you have to disclose that on your tax return every year. On Schedule 3, any gain resulting from a sale of your own principal residence is exempt on the principal residence exemption.
And what determines a principal residence? How many years of occupancy?
Well, you can designate all the years that you're in a home. That's the average person probably has only one principal residence, but then there are some people that have cottages or they have vacation properties, and you can get into a situation where you designate your vacation or property or cottage for so many years, and your and your primary home for so many years. And we can help you navigate that and go through what's the best way to approach that. I've seen situations where we've taken a mix where it depends on the market value, how it's increased, and the timing of a disposition of a property. That all comes into. So there's no real cookie cutter way to tell you what's best. It's all it's variable depending on the situation.
Probably consult an accounting firm in order to proper guidance.
Yes.
The what about like for families, some of the biggies, daycare, sporting fees, for some people, medical costs, any changes to any of those write-offs?
Well, the sporting fees, ever since the current federal regime has taken power, has eliminated any type of credit for sporting fees. We won't get into naming political stripes, but that's another show. Tune in next week.
Yeah.
And as far as daycare goes, yes, you are the lower income earner is allowed to claim the daycare fees on their return as a deductible expense against the income. So it benefits the lower income earner of a couple.
So if I'm, and for our listeners are generally us, so for the people around this table and the seven others that tune in, what are some of the things that once tax season is over and everyone forgets about taxes until next year and this time of year, instead of forgetting, what are some of the things that the average family should start trying to do or start thinking about doing to try and make this time of year a little bit easier and maybe save a few bucks?
Okay. That's a good question. So when it comes to the average family, you have mom, dad, they were both out there working presumably as employees. Your options to minimize your taxes fairly limited. Now, there are some instances where someone is in a situation, let's say, here's a good example, traveling nurse. I just spoke to one yesterday. She has her conditions of employment form where she has to actually use her private vehicle to go out and deliver services to residences in their homes or at specific workplaces. So as required by her employer, in order to perform the duties of her occupation, she has to use her own vehicle. She's allowed to claim as a deduction against her income the wear and tear on her vehicle, insurance, things like that. So that's a good example. But
hang on. In order to do that, though, she's got to take steps in order to document it so that when it comes time for filing.
Oh, absolutely. Yes.
So what kind of things?
I don't know how much detail you guys want to go into.
Let's
is this a 4-hour program or 45 minutes?
But that's where you provide some guidance.
Absolutely. We provide that guidance. We suggest for them how to track their mileage. There are a variety of different, and today's technology, a variety of different apps that they can use to create an automobile log, track your receipts, keep your receipts for your vehicle's fuel, your insurance in that particular instance. If there are truck drivers is another example. If they're short haul or long haul, they have meals. As long as they're away from their home terminal for a period of hours, they can claim some meals. We can help them do that, claim that. But for the typical family out there, if they're just working for someone else and they get their T4, generally the biggest way to help defer taxes, putting money away in RSPs. And then making sure that they're claiming the other credits that they might be entitled to, such as donation credits for donations, donating to your church, donating to the local food bank.
The hospital.
Thank you. Donating to Erie Shores Hospice. I know I donate that to that cause every year, which is a great cause. Medical receipts. So speaking of hospitals again, any expenses paid for out of pocket, whether it be for prescriptions or for dental visits, which we can get into the Canada Dental benefit as well later on. That's something that's new. And but keep those receipts as well, and then we can add those up and help you maximize your personal tax credits and minimize the tax.
Now, for if you have two adults in the household working, it gets a little more complicated if one of them is working from home. And those rules changed this year, right?
Yes. During COVID, there was a flat rate. I think it was like $2 per day that you were working from home, that you could claim as a credit from working from home. Akin to the use of a vehicle, if your employer requires you to work from home, you have to have that in a conditions of employment form. It's called a T2200, but I won't go into the details on that, but we can assist you with that. And then you can claim a proportionate amount. Let's say this room was one of 7 rooms, just to break it down real simply. It's based on square footage, but one of 7 rooms in your home that you use for work and you designate for work, then you can claim 1/7 of your housing cost. So that would be 1/7 of your mortgage interest, home insurance, your utilities, things of that nature.
So I said, I use the whole house. I can write the whole house off and get a house for free, right? And a car. I can get a new Land Rover. No.
Not quite.
No.
See, again, I heard a guy. He told me.
My cousin.
I was at Tim Hortons.
Yeah.
A division. It's pretty slow in there.
Now, what if I sell Scentsy?
Yeah.
Do I have a business and can I start writing things off? And not just Scentsy, but all of the quote unquote side hustles.
Tupperware.
Is a Scentsy for what's going on here?
4.
There are some
like a migration path in here.
There are some.
Oh no! Oh no!
We got them all. Gary, get a couple more. Yes.
Mash.
Whatever
Sorry
keeps
to
them
cut you off.
tuned.
I am sorry.
No, to answer your question seriously, there are some other qualification or other areas where you have to fulfill in order to make that a legitimate deduction, which we would be happy to discuss with people, if they came to us to be consulted on. There are some other areas to make your home office. If you're conducting business there, it should be a regular place where you are meeting with clients or business contacts. So there's some other areas where we can support you should CRA come knocking, and we can prove that is what you're doing with your home.
So if I'm selling a ton of stuff on like Kijiji that I bought at yard sales and I'm flipping it for a profit, that's hard to track.
Yeah,
right?
Yeah. Let's put it this way. There's a lot of
Excel.
I reserve to give you a definitive answer because there are a lot of caveats out there. So we want to make sure that we're we're checking all the boxes that we can to make we can put anything we want down to CRA. The question is, can you support it?
Right.
Can you, and will, if a desk auditor or an auditor actually shows up, can you support your position?
And that's a really good point. And no joking aside, the role of an accounting firm is not to defend you in any kind of audit. It's to be able to prepare the information in the manner that is provided to you by the client, so that the CRA can ask the questions and receive that information. Yep. Like, you're not like a lawyer that, don't worry, I'm getting audited. I got Barry and he's going to come in, he's going to fix everything. Because the guy told me I was at
He's going to bury the evidence.
It's 5. Thank goodbye.
No more, Steve.
Keep it going.
I'm actually learning today too, but I've got to chip in here.
And again, no joking aside.
Keep going. You can eat my.
Oh, wow. Can you tell what time? What time of the year? But that again, I go back to it. These are decisions that you have to make in order to better set yourself up through adulthood and into the next stages of life.
Yeah.
So we talked about RRSPs. We talked about expenses and deductions and current. Are there any other manners that people should be reviewing on a yearly basis that help their taxation situation going forward as they go through their career and into retirement? Like you accumulate.
There's a lot of levels in that question.
Right. You accumulate assets, right? Yeah. Like you've got, debts that hopefully you're paying down to a certain extent. So, is there,
Yeah, the whole planning for retirement thing has to do with accumulating enough money where you have enough money working for you, you don't have to work for it anymore. And that can be sourced from a combination of different sources. It could be your pensions through work, could be your CPP, it could be personally funded with RSPs, diversifying investment portfolios, just not with RSPs, but a lot of people will invent
ways to make money.
Yeah, ways to make money. Invest in ways to make money, such as rental properties, land. I help a lot of farmers out with their taxes. They're self-employed, which is another area entirely in farming. So there's a lot of levels or a lot of options and different strategies that you can employ in that one statement that you made. So, like I said before, there's no one cookie cutter answer. It all depends on the individual's situation, and that's what. Yeah, I'm gonna say oxymoron. It makes accounting so exciting.
Yeah,
is everyone
said just Barry?
So when you work with these farmers, do you look at each other and say, "Hey, you're outstanding in your field"?
No.
No.
Yes.
Okay, I'll backtrack on that one.
7. You're not even gonna.
No, that was no.
I see Kevin wears John Deere green tonight, so it's perfect.
But it's close to St. Patrick's Day, so it's going to come out a couple of weeks before. Anyway,
yes.
So the future planning and whatnot. You're exactly right. There's so many different ways and aspects to take a look at transitioning into retirement and how to handle your assets, your businesses, and whatnot. Mm-hmm. On that.
And it depends on your needs too. Everyone has different needs when they go into retirement and different goals. Some people are really, presuming you're in good health and everything's going great. How much you want to travel? What do you want to do? So everyone's needs are going to be different. I've come across people who have a very active retirement lifestyle. I mean, they're jetting off to Australia, Europe, spending winters in Florida or Arizona, but that's not the norm. And then there are some people who are just happy that they can stay in their homes here in Grand Old Kingsville, and enjoy the sun parlor of the country and the mild winters we have here, and live very comfortably. So it all depends on
like our close proximity to Lake Erie.
Yes. Yeah. Yes.
Watch the
scariest lake of the 5.
Mm-hmm. Watch the migratory birds flock in and out as the seasons change.
Lake Ontario takes what Lake Erie will give her.
Thanks, Gordon.
So through your prestigious career. Prestigious career. You're well traveled and well seasoned, Mr. Wilson. I'm sure you've seen some things, and I'm approaching it as somewhat of a joking manner because there is some misconceptions about accounting.
You gotta have fun.
So
it keeps it interesting,
right? So I'm sure that there's been a guy or individual that's come into you and asked a very outrageous, statement or question about what they want to do, and just how wild and crazy was it? Like, you gotta have something like, I want enough money.
So what you're looking for is like when you're sitting around the bar at the CPA conference and all the accountants are just sloshed.
Yeah. Trading war.
Yeah. What
happens.
What
never.
What are the crazy stories you're telling?
I do know that there was a guy that had a storage facility, and he had dogs guarding the place.
Oh,
yeah, and he wanted to deduct his vet bills and dog food for security. That's his security system.
And were you able to work through something?
You can write anything on a piece of paper.
Correct.
That is true.
And we do. We say, okay, that may not necessarily fly with an auditor from CRA, but we'll put it down. And if this is what you want to claim, we'll put this in, but just let you know that it may not fly with an auditor and you might result in a reassessment. But that never came to pass. And I don't think we ever claimed the dog food or the vet bills or the dogs. But
Kibbles and bits aren't exactly on somebody's line item for expenses.
that
Seems plausible.
Yeah, wow.
seems plausible.
This is-
Yeah.
He got a return of $9.
Love it, Steve. Love
Because
the nine.
Hiram Walker, the warehouses there in is it St. Clair Beach? Didn't they used to be guarded by security geese
The security keys.
many years ago?
Was it really?
Yeah.
On East Pike or West Pike Creek, whatever Creek Road. And,
So I
Number
wonder if
two.
Hiram Walker's ever got away with claiming the cost of the geese.
well, Hiram Walker himself has got a storied past. I'm sure there was other things back in the day,
Yeah.
Metwas. But I joked earlier in the episode about the individuals that think that you can manipulate numbers to benefit people. We already touched on the fact that that's not the way accounting goes.
And at the end of the day, all a tax return is basically a reconciliation of the taxes that you actually owe versus what you've remitted. And if you've remitted too much, you get a refund. If you haven't remitted enough, you have a balance owing.
So and now if you've got that balance owing,
Mhm.
right, and you don't pay it by when,
April 30th.
what happens?
Well, we encourage people, and we'll ask them. So, especially if they have a significant balance owing, because we've done tax returns, especially in the area of estates where there's tens of thousands of dollars owed. And it's like, we don't have that. Great. Then take the steps to be proactive. Contact CRA. Tell them we realize we owe X amount of dollars. Could be 30,000, 40,000, what have you. We intend to pay it. We'd like to make payment arrangements. So always be proactive and contact CRA. Don't wait till they contact you because you're kind of on the bad side.
Yeah, the short end of the
short end
stick,
of the
the
stick.
proverbial. Now, if you've got a return coming and you don't file, but like, hey, I've paid. Is there any penalty for not filing?
Well, no, they owe you interest. Then.
Correct. Oh no, they
Nope.
do, but they don't.
They
pay.
won't pay you because you're obliged to file on time. I just helped a client file 11 years worth of tax returns, and every single year, this person had a refund, and they end up getting close to $9,000-$10,000, but they didn't get any interest. I mean,
Mhm.
the government just says if you don't want to file, we're not going to give you the money. There's no interest that they pay. On
Kind
that.
of adds up over the years too, right? Like bit by bit.
Mhm.
So if you're a small business, again, you've got different tax filing dates.
Yes, if you're a proprietor or part of a partnership or farmer, self-employed person, you have until June the 15th to file. You have a little bit of an extension past the April 30th deadline. However, if you have a payment that's owed, interest starts to accrue at April 30th because the payment is due then. Especially in today's interest rate climate, I believe the prescribed rate for CRA on outstanding balances is approaching 10%. So we definitely want to be cognizant of that and making sure that we're filing people on time, especially when it gets into corporate, because their returns or their balances are due 90 days after their year end, even though they're not obliged to file until 6 months after their year end. But they owe $100,000.
It's coming.
That's a 10%. That's quite a bit. Yeah. So, but you can avoid interest by making sure that you're filing on time at April 30th and avoid penalties too. Because that was one of the notes I've made here is that CRA has effective, I believe, Jan 1, 2023, their late filing penalties have increased from 5% to 10%. So they've doubled.
It costs you money.
It's a lot of money.
Yep.
So if someone watching this, the one of the four,
There's more now.
realize that they haven't filed taxes in 10 years, are you still able to help them? Like now, do you have time? Can you fit them in? And if so, then how can they get a hold of you?
Yes, they can definitely reach out, call the firm, 733-2321, and speak with one of our lovely administrative staff, and they can direct you to one of our accountants there, and we can definitely help them.
Chapman, Sanger and Associates.
Chapman, Sanger, and Associates.
Right on Main
50
Street.
Main Street East.
That's a wonderful location. So
Nestled between
Domino's Pizza,
and McGregor Sims, Schmoren's, and Hart Law Office.
See?
Yeah.
So you can go over there and you get your will and trust and all that taken care of, and then you can go do some, tax preparation.
Yeah.
Right.
And you
By
have some
then you'll be
pizza.
hungry.
And by then you're hungry.
Get yourself a delicious Domino's Pizza. I wonder if we can get Domino's to sponsor us.
Or walk down a few more steps and go to Vern's.
Vern's, yeah.
Oh,
Have an old Verno, right? Delicious Johnny bread. But so other services that accounting offices, right? We're focusing on personal taxes because that's really the time. So what other things are commonplace that you can handle for not only just individuals but small businesses and businesses alike?
Yes, that's a good point. Personal tax is a very important area that we focus on. In conjunction with a lot of clients that we have corporations and they have businesses. So it goes hand in hand with the tax planning to tax efficiently flow money out of a corporation into their own pockets as individuals through their tax return. That's important. And there's a lot of different options out there. I mean, a lot of people are trying to do their own taxes with the software that's out there available today, or they go to perhaps a discount preparer out there. But it's what you don't know that costs you. Mm-hmm. So that's where we bring that value. And a lot of people focus on price, but I find that price is usually only an issue in the absence of value. So when we bring that value to them and we save them $300, $400, $500 in taxes and come up with strategies to help them on a personal side, it more than covers our fees.
I heard a guy, it was like Canadian Tire, I was buying some oil. And this guy said, I just got to get a bank account in like the Bahamas because it's like a tax haven. So can you help me get a bank account in the Bahamas so I can not have to pay taxes? That's not a thing, right?
Not that I'm aware of.
Yeah. So that guy was wrong.
No, it's actually the Caymans.
Is it Caymans?
It's being facetious again.
I know.
The character.
Yes. Get the what are those white papers called? Whatever. But everyone's names are on them. But more pertinent to what you're talking about, yes, we do offer services on the corporate side as well, which is very important considering, especially we're seeing a lot of times where we're transitioning businesses, lifelong businesses of mom and pop. Their kids are now in their 20s. They've been working in the business in their 30s, and mom and pop want to transition out. So we have to help them with the planning, setting valuations on shares, making sure that there's a tax efficient way to pass a business on from one generation to another. It's
succession planning.
Yes, succession planning.
Serious implications.
Exactly. And I don't for 1 second claim to know everything about it. That's why we have a great tax team back at Chapman Sanger Associates, where we can help put together a plan.
The sales pitch.
Yeah, the sales pitch.
Help put together a plan that save them literally hundreds of thousands of dollars. And I've seen it time and time again, especially with farms, especially in this area with Essex County and my father-in-law being a farmer. It's experienced personally. So you see the effect.
Mine too.
Yeah. So it's
mine too.
Yeah.
So joking aside, yes, it's very important stuff you don't want to leave it to chance. You don't want to have the conversation. And I know people are sometimes intimidated. Our office isn't that opulent. I can tell it's pretty easygoing and nice, comfortable office and respectable. And we can have a conversation. And for those people who are worried, we always are upfront about our fees and what our costs are. Because people are apprehensive about that sometimes. But as you can tell, hopefully with today's video, we can see that we're approachable. We'll have a conversation.
And that's a good underlying point. Again, we asked you here for the the general understanding about how to approach taxes as an individual, right? We're a community-based podcast, and a lot of people don't understand.
Well, and I think it's important to point out too, for anyone that may qualify as low income or receives any social services, there are free services available to get your taxes prepared too, and usually you can contact United Way or
SECC, I believe,
SECC as well.
Got their references.
Yeah. I work actually for the first 8 to 10 years of my practice, I was always practicing. I worked at volunteer tax clinics, and we provided services where we prepared tax returns for low-income seniors, single parents, a variety of different people who are just trying to navigate the labyrinth of the Tax Act and make sure that they're not overpaying tax.
And that's the key, right? You guys are keeping the barometer. You're keeping up to speed with what the changes are year to year. As you referred, regime changes in politics have implications in CRA, and the Tax Act changes yearly. And it can have consequences if you're not understanding where you fit into the whole picture. So
a very large one from last year is a compliance filing called underused housing tax, or UHT. People who have properties may not realize, like we talked about cottages and vacation properties earlier. If it's not rented out, you might have a filing obligation if it's not in a designated vacation area, where you have to file a UHT form. So it's the government trying to intervene with the foreign ownership of property. I mean, a lot of this has to do with the major urban centers like Vancouver, Montreal, Toronto, where you have a lot of foreign ownership of condos, and they just sit vacant and they're waiting for the market to go up, and they just profit from it. Unfortunately, with the regulations that have been released, it captures a lot of law-abiding citizens and tax-abiding citizens, where if you don't file those UHT filings, and they're required, there's a non-compliance fee or penalty of $5,000 per property.
Ooh.
For an individual. And for corporations, it's $10,000 per property. So again, that's more regulation that we need to be aware of, because if we're representing a client and we don't make them aware of this, then we're obligated, or not obligated, but we're responsible for not informing them and keeping them informed. And again, that's another area where a lot of people will just try to do things on their own. Again, as I said before, it's the things you don't know that cost you. Right.
And part of your client responsibility is knowing which clients that you have under your, observation of, hey, Steve and Kevin have these properties that they may be, under these circumstances, if we don't call them in and have this discussion, and might turn out that no, it's not the case anymore. And hey, you're avoiding that penalty.
But that's the good point. Have the discussion. That's the whole point.
Exactly. And people are very sensitive when it comes to money, right? Like people have been taught and are very concerned, but you're professionals that this is your responsibility to make sure that you're looking out for the individual. Yeah. So it's not like, you're out on the street talking about, hey, Dave's, he's really in debt. He goes to the casino all the time and he really loves, blackjack. Right. It's a character again.
This guy's the worst.
I don't gamble. I can't afford to gamble. Plus, I don't know how to count to 20, man. But that's more so it. It's depending on your situation, there's always the opportunity to go to an accounting firm if you feel that maybe you don't quite understand. Your situation might be a little bit more complex than just a basic filing. Getting some guidance, getting a little bit of visibility, getting some understanding about where your situation is, and having that conversation and that planning in order to, like you said, alleviate some of those tax implications or burdens and do some future planning. So
back to what Kevin was saying, right? It's not knowing and how to plan for it. So we don't really know what strategy to recommend to you until we actually know all the facts of your situation. So that's where that discussion has to come in. And you mentioned money. Money is not the most important thing in the world, but it ranks up there with water and air. It's a tool that helps you do the things that you need to do in life for your family, for your kids, so on. So yeah, it's a very important thing. And I find it very difficult to believe that people are just going to defer to a AI type reality of dealing with their money and not sitting across the table, kneecap to kneecap, and discussing their financial futures. It's just unfathomable to me. But then again, maybe I'm an old guy, so I don't.
Before we close out the episode, I got one last question. You bring it up with AI.
Yeah,
Bitcoin. The wild world of Bitcoin and Ethereum and whatnot.
Yeah.
How much interaction and how much do we have to be aware of the conditions about Bitcoin?
I don't know if I'm qualified enough to even comment on that other than the personal research I did it when it first came out. My understanding, it was a form of remuneration exchange between programmers. Hey, I'll do this for you. You do this for me. And if I'll do this for you, they created this Bitcoin. That's the extent of my knowledge on Bitcoin. Again, as I've mentioned before, maybe of the old school, but if I cannot feel it or touch it, I don't know if I really believe much in it. It's all ether out there in the internet, and I don't know about you. We work too hard for what we have to kind of just roll the dice. But again, maybe I'm missing the boat. Yeah. I don't want to mislead anyone. If you do your research, everyone's different. If they feel comfortable with it, run with it.
But if so, let's say you're an investor and you have some serious gains, that is there an obligation to report those on your tax filings?
Absolutely. Is that where you're going with that?
Yes.
I'm sorry. Yes, absolutely. Just like any other investment out there, whether you were investing in gold, stocks, bonds, any type of investment where you have profited, then you're obliged to declare that on your tax return as a capital gain, which, by the way, capital gains are get a little bit of favorable tax treatment where you only have to include 50% of your gain in income. So if, let's say, you did purchase Bitcoin, as we mentioned, and you put $1,000 in it, and it's worth 11,000 and your gain's 10, you only pay tax on 5 at your marginal rate.
See, and then having a conversation with an accountant will help you understand that.
Yeah. I'm sorry, I totally misread you on your question about Bitcoin. I thought you were asking me my personal view on it.
Trust me. Again, I don't. It's all in the exactly. It's only ether. I don't know, but apparently the kids like it. So I guess it's their problem. So
yeah.
Oh, Barry.
Apparently the kids don't like EMA either. So
apparently not.
Yeah.
And we'll find out more about that on the next episode of That Kingsville Podcast.
I'll see you tomorrow at 1:00.
Yeah. No, we're a little bit. Oh, actually, by the time this episode comes out, it'll be a week later.
Okay.
So
March 1st, 1:00.
Yeah, there you go. In the past. So.
Yeah, so if you got nothing going on, jump in your DeLorean and head back.
Just 88 miles an hour.
Back in time.
So, again, one last statement, moment that individuals, like, when should they contact you in order to start this process? Is there a good time? Is there a bad time?
Well, no time like the present. If you have all your information, bring it in.
Shoebox is full of receipts. Okay.
No. Let's keep in mind, just like anything else, our fees are based on time. The more you can do for yourself in organizing your information to minimize our time, it'll minimize our fee.
And we should go to like Dumb and Dumber and get the Samsonite briefcase full of IOUs. That doesn't work. As a reference. You remember that moment?
I get the old Xerox bags full of receipts. Here you go.
Have you had that?
Oh, yeah.
See, these are stories you're like
Xerox bags full of receipts, shoe boxes. Yeah. Here you go. When will be ready? Tomorrow?
By the hour.
No.
By the hour.
Not tomorrow. Call me in 2 weeks. But there's all kinds of stories.
Better prepare yourself.
A shoebox full of $30,000 of a shoebox. First generation are immigrated here from Italy. Daddy, I got this $30,000. I made some money on selling some land. What do I do with it? Give it to me. No. No, but seriously, he had $30,000 in a shoebox.
Well,
I'm like, Carlo.
Yeah.
Take it to the bank.
Yeah. Let's invest this. Let's make some money.
Don't leave it in the closet.
Well,
Let the house burns down tomorrow.
Yeah, exactly. Protect yourself. So
This is 25 years ago.
Yeah.
So
yeah,
things like that.
Gone. So yeah, Barry, thank you very much for coming in and just kind of broaching the topic again. We wanted to introduce the services and the general idea that your taxes are something that is a mandatory thing that we all have to address every year, and there's a lot of unknowns and a lot of uncertainty around it. So
yes,
thanks for having the conversation with us and answering some of the questions. And I hope that if you don't reach out to CSA, there's other firms and there's other opportunities in order to get some conversation about personal taxes or your business taxes,
absolutely,
or your corporation or etc.
In general, most accountants are, and they're not going to charge you for every minute on the phone. If you got a few questions, I'm sure they'd be happy to answer.
Right. You also have to, take care of everyone's best interests with regards to the scenario. And without that conversation, you won't know. So thanks for coming on That Kingsville Podcast.
Thanks for having me. Really appreciate it. I had a good time, and hopefully it was light enough and interesting enough that people are still watching it.
Don't you worry.
Because
that's our
they weren't watching at the beginning.
No, they weren't.
It's a dog eat dog world out there. And we're all wearing milk bone underwear.
Hey. Well, thanks for tuning in.
My homage to Norm Peterson from Cheers.
Yes. Oh, Jesus. You see, that's a reference that like Seinfeld and everybody, they don't get anymore because you don't watch appointment TV. Like that's a bygone day.
Love Cheers.
Love Cheers.
Yeah.
Boy, oh boy, Woody Harrelson. Anyway, thanks for...
I bet you have a smile that lights up our room. I was wrong.
Thanks for tuning in to this episode of That Kingsville Podcast. Please like and subscribe.
Can we make sure we never have Barry on again?
Never again. Sorry, Barry. This is it. One and done. You're out. You're out.
I've heard that before.
Like and subscribe. Thank you, Gary Glass, for
Thanks, Gary.
Show. And we'll see you next time.